Hi everyone. Today let's talk about what to expect from the S&P over the next 10 years. We've talked about this a few times, but this has a little bit different information and I do want to talk about it because it's in line with some of the things that I've been mentioning with a little bit more data to support. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So let's talk about the S&Ps. What can we expect over the next decade? You can see it's been pretty easy to make about 13% returns with no questions asked. Stocks are likely to make a mere 5% per year over the next decade based on this, which with inflation taken out is only about 2 to 3% potentially. So we'll see. The biggest drivers for owning the stock market right now, they say dividends, earnings growth, and changes in valuations. They say 10-year returns have swung pretty wildly with a very satisfying 15% to potentially losses on a per year basis. But let's take a look at some of these indicators. Scenario 1, they say 50% probability, 4 to 7% returns, 30% with near 0% returns, and a 15% chance of roughly 10% returns. I think all of these are a little bit optimistic. They're saying that there's no chance of markets going down at all over the 10 years, potentially. But what is driving these returns? They say premium risk, inflation, definitely interesting. Historically, about 6% is that premium risk after inflation. And you can see that here averages out to around that 6% for equities from periods of 10 out to 121 years. Very, very long term, that's the expected risk. But the returns over the decade can vary pretty wildly here. You can see minus 5% per year to returns of around 15%. And you can see what those returns look like here. Obviously negative returns in here, 37 to 40, negative returns 2008, very bearish, even over the 10-year period. So a couple of 10-year periods, generally bearish in there. But overall, most of them end up bullish. We've been talking about that for a while. Generally, it's up and to the right, but you can see the variables here. Total returns minus 1%. So what is going to be that driver? Your income, dividend yields. We've been talking about it. Buy bonds, buy real estate, REITs, whatever it is that has yields. I think this is the opportunity over the next 10 years, especially at current prices. If we find cheaper prices, that is going to be the buying opportunity. Right now, it just looks a little expensive. And if you factor in those dividends over the 10-year period, you can see how much more positive it gets. So even in those bigger drawdowns, they're very shallow. And with those higher rallies, the dividends push these up a little bit more. So dividends, yields, that is the place to be buying. In my opinion, growth just feels expensive. If you're an individual stock picker and it looks really good and you're a short-term trader, I think there's opportunity there. But on the investing side, I just don't see a lot of upside opportunity at these prices. Next thing they mention here is profits. Can profits continue to go higher? Sales boosts, widening margins, share buybacks, EPS growth, they say -1. For the formula, -1 for EPS. And they mention here earnings growth has been generally in line with GDP numbers, approximately 5% per year, with GDP being in that 2.9 to 7.9 range. Earnings growth and returns are generally aligned pretty well. Obviously, they will fluctuate, but they're generally aligned. And you can see when you're in earnings growth, you have really strong returns. When it's going higher, returns are going higher. And then you have 2008, and you have these recessionary environments. You held up pretty well, actually, in 1934. But as these eventually went lower, you can see prices went lower, and then you had negative returns. So earnings, obviously something to pay attention to. So far, earnings season this year is pretty good, but we'll see how that continues to play in second and third quarters. And then change in valuations, i.e. leverage factors. Right now, there are a ton of funds out there that are basically leveraged as much as they can go, which again, we've talked about it. When the exposure to stocks is so high, there's just not enough money for things to continue to go higher. So if profits are not going higher and dividends start to dry up, sentiment starts to change, and then you can start to see that leverage come out of markets, which is when you see those bigger sells, in my opinion. Of course, you have these other factors which can be an issue, especially with the tariffs coming in. We've talked about that. Saw those being implemented this weekend. On the Friday, they were priced into markets a little bit more aggressively, and then they were implemented there on the Saturday, so we might open up a little bit lower. On the futures, that could be interesting, and then you still have inflation, higher interest rates than we're used to, but still not higher historically, and then waiting to see if those profits continue to come in well over the next couple quarters. So far this quarter, I think they're strong enough to keep markets up. And then of course you have the emotional side. Things just feel expensive. The feel of the market is expensive to me. Doesn't mean we can't go higher. Absolutely not. Markets can do anything. They continue to go higher, but at these higher levels, where is the risk? And you can see right now contributions are fairly high, which is holding up markets at least a little bit, but is this going to start to taper off? Potentially. And then this chart is a little bit hard to read, but you can see here we're at a point that's still fairly healthy. If this continues to decline in here, you can see changes in valuation starting to go down with earnings growth going down. Dividend yields also not super great. They're at a pretty low level. Relative to history, we're only at like a 1.5, 1.25 range in here, where historically they're usually between 5, 4.5, somewhere in there percent, and they've been tapering off here slowly. So that's why I've been saying find better yielding things. You can see here, when you have these below average valuations, high yields, those are good opportunities. But when you're in these lower yielding times, that can be an indicator of poor returns over the next decade. And then lastly, they talk about valuations here. Can be relevant. You can see how highly valued we are. Very, very expensive on a PE basis. You can see it here, 36, 37, somewhere in there. That's not as high as it goes. You can see 2000 was definitely the highest level. But when you are this high, then you start to see returns over the next decade start to be negative. Is this what we're seeing here? Is this another more moderate iteration of the dot-com bubble? Certainly a possibility. And that's only about half of this article. If you want to check it out, I'll throw it down in the description. If you're a Finimize subscriber, definitely check it out. You do get 1 or 2 freebies, I think, to check it out and read the rest of this. Overall, basically points to a lot of the things we've been saying. Not a super great time to be a long-term investor, in my opinion. Looking at fear and greed real quick, we finished at a 46 for the week, up slightly from the fear we saw a week ago, but we did see a kind of peak here at the 50 level, which we thought might happen, and it seems like that's what we're getting at this point. Fear on momentum, extreme fear on strength. Despite it continuing to rise here, we're still very low, lower than we've been all year. And then looking at breadth, you can see this has moved back into neutral. We'll take a look at this area, see if this is a zone of resistance or not, but it's recovered pretty well into neutral. Put call ratio still in greed, but starting to elevate a little bit there. We had a bit of a bottom here at 0.63. Now we're back into the 0.66 area. Probably headed to 0.7 realistically, and then volatility, bit of a spike up on the Friday, makes sense. Safe haven demand starting to get into greed. We'll probably see this roll over a little bit this week, and then junk bonds have not moved for basically all month. Moving over to the AAII survey, you can see we're at a 41 from a 43. We pulled back slightly there. 25 neutral, squeezed a little bit more. Bears coming in a little bit more on that Thursday, and this did not include that down move on the Friday session. So expecting this to kind of expand back towards the bear side. We said this was kind of peak here. So far we've declined, and I'm expecting that to continue to go here a little bit over the next week to 2 weeks at least. Moving over to seasonality, February post-election is some of the worst trading out there. You can see early in the month, get a little bit of a pop here potentially, but after that, it is pretty much straight down for the rest of the month. Election years being the big indicator here, post-election, dotted lines, somewhere between -1 to -3% potentially, especially for the NASDAQ. Something to keep in mind, not a good time seasonally for February. And then looking at the calendar, the beginning here, like I said, pretty good. First trading day, up 19 of the last 22. That's what we're hoping for. Up 14, down 7. Pretty good number there for the Tuesday as well. Wednesday, bad. Thursday, good. Tons of data here on the Friday. We'll look at the calendars next. President's Day week, up 10 of the last 14. So really that first 2 weeks-ish. And then we get into expiration week. Closed for President's Day, pretty dumpster fire there. And then you can see bearish, 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 neutral, one bull day, and then bearish to close out the month. So not a good month overall. Moving over to the earnings calendar, we got Palantir, Tyson Foods, Clorox. Want to see how those are doing. Palantir being the big one there. Almost 200 million in market cap. Pretty crazy to see Palantir up that high. Tuesday, you get Google, Merck & Co., AMD, PepsiCo, Pfizer. They've been in the news recently. Chipotle, PayPal, fairly interesting. For Wednesday, you have Disney, Qualcomm, ARM. ARM definitely going to see how they've been doing. Huge valuation there. You can see revenues, 761 million with a valuation at 167 billion. It'll be interesting to see if they can retain that. MicroStrategy in there. Definitely fun to watch, at least. Yum Brands to see how food industry is doing, at least for that fast service. Thursday, Amazon, obviously the big one. Eli Lilly, they've been selling off a lot. Huge company, but They've had some rocky stuff going on with their weight loss drug. That'll be interesting. Honeywell, Philip Morris, Bristol Myers. And that'll pretty much wrap it up for the week. Not a whole lot here on Friday. This is the last big week in terms of earnings, in my opinion. You have some of those outliers. You got like Lulu and NVIDIA that report on a weird schedule, but this is the rest of the Mag 7 and we should be in good shape. Overall, I think it's probably going to go fairly well. Moving over to the economic calendar, you have core and headline CPI for the Eurozone, fairly interesting. ISM data here, construction spending, fairly interesting. And then this is a jobs week, so you got the jobs jolts. So you got the JOLTS job openings here on Tuesday. Fed members speaking, probably not going to do a whole lot there. And then you got imports, exports, bunch more economic data. Expectation on those is pretty good. A little bit lower than the previous, but overall still pretty good. And don't forget you have the ADP non-farm employment change in there for Wednesday as well. And then looking at the Thursday initial jobless claims as always. Fed balance sheet, Fed Waller speaking, and then the Friday going to be the big one. What kind of moves are we going to have on the Friday with that unemployment rate? It is expected to stay flat, still holding at that 4.1 level, and then a little bit more Michigan data, but obviously the Friday is going to be the big one for the week. Looking at Max Payne here for the week, you can see it's a little bit bullish pretty much all week here up until the end of the week where it turns just slightly bearish. So looking for a little bit of bounce early in the session. We'll see if it follows through on that. On the Monday, Tuesday, we talked about the seasonality looks a little bit bullish during that period as well. So overall, that continues to make sense. Moving over to the charts for the Friday Max Payne, you can see put walls 582, put walls here 600. So expecting a little bit of a bounce. Again, does that hold up all week? Hard to say really. Put call ratio is extremely high there at a 4.8. Call walls pretty small. Tons of puts. I would expect at least a little bit of a bullish swing. We'll see if we get that follow through into the Monday or not, but right now Max Payne says bullish. Moving over to the charts, looking at the S&Ps here on the weekly. This is taking off those horizontal lines for a second there. You can see this is still an overall uptrend. A little bit of choppy action in here. We've caught to this high. We touched it 2 weeks ago. We touched it again this week. Still rejecting from there. Is this consolidation before a bigger pullback? So far, it seems like it. We've seen this before where you pulled back, hit some critical levels off of a double top here, and then we found support and rallied through. Is that going to be what we see again here, where we get a little bit deeper pull? 21 EMA is down at 586.66. Touched that level and then bounced from there potentially. Overall, it was down on the week. We double topped at the high from that previous week and these all-time highs here threw some wicks into that zone. That's not a great indicator, and you can see it here on the RSI. Touched the SMA, broke back down there on big volume. Not great at all. Medium term says this is still pretty either sideways consolidative to bearish in my opinion. And then looking at that SPX here, you can see the trend, huge wick to that level, rejected and closed below it. So again, trend resistance right in here, 6,072, somewhere in there. That would give you just a tiny amount of upside to hit that trend there. Somewhere between 0.5 and 0.75% in there. Maybe we touch the all-time high and then reject one more time, potentially. Seems like anything is in play. Volume coming through. Same really charts as the SPY charts. And then putting those levels back on, you can see that Friday candle down 0.5%, but it was a big intraday reversal candle. We're back into the middle of this kind of rising wedge formation. On the hourly chart, we did break below it. What I want to see here is a retest of this zone here. So you get a bounce, retest. Then if you retest the low of the range here and then reject from there, then I'm going to be expecting much more lower lows. So we pulled back, got the gap filled. That was kind of the expectation. Now we've topped out. Is it going to be more sideways choppy with a trading range somewhere between 579, 580, somewhere in here, all the way up to the 607 range, and we just kind of go sideways up and down through here potentially? Either way, if that's the case, that's giving you potential for about another 3.5%, maybe 4% lower in the short term. But overall, markets have not gone higher since the beginning of December, and here we are beginning of February, still waiting to see if we can make some higher highs. It seems like this longer term trend structure that we had from August up until about December has kind of culminated. We've gotten sideways choppy action at best, which seems to be turning a little bit more bearish in my opinion, especially with that intraday reversal on the Friday. And then looking at the SPY charts here on the monthly, actually just wanted to look at the monthly weekly here because we did have that month roll over. You can see we are definitely extended on the SPY charts above that highest ATR band, which is currently sitting at 596.91. I would expect some pullbacks, but structurally this is still intact. We almost touched the 9 EMA on the monthly, 8 EMA on the monthly just for a moment, 571.71. And then we did rally out of that. So continues to go pretty much straight up, definitely extended. You can see last time we got extended, we had a pretty decent pullback here. So we got extended, pulled back, went slightly higher, and then pulled back to the mid range. If we did, that would take you back to the 448 area. Obviously, much lower from here. We'll see. Right now, still very much bullish conditions. Weekly chart, you can see that momentum continuing to fade. Didn't make it to the second ATR band before pulling back here. So momentum bearish, expecting this to go a little bit lower based off that weekly close. Pretty much the same as what we were seeing on the previous charts. And then looking at that daily, you're still in bullish conditions. So we're looking for a little bit of a retracement here off of this consolidation zone. Want to see it touch these areas, go just a little bit higher, maybe consolidate for a week or so. Then I would be expecting this to kind of pull back potentially down to that 50.89 EMA in there at 587.10 potentially. You got the trailing stop there, 589.35. So in here, this is the zone that we're looking for. If we get that follow through to the downside, again, is it going to happen immediately? I think it's debatable. The first week of February is seasonally a little bit bullish. We're definitely extended on the short time frames. We talked about that on the Friday. And you can see that here, big selling. We did sell off quite a bit more after hours that I didn't notice. Some of that could be just the spread widening at the end of the session, but we finished here at 598.98, basically 599 right in here. Super extended below that lowest ATR band. I would expect at least a little bit of a retracement. Moving over to the NASDAQ here, you can see down 1.36% on the week, filled the gap, sold off, pretty much the same as everything else. Went to the trend here after almost hitting the 21 AMA. Momentum very slightly bearish, RSI breaking back below the SMA here. This isn't downtrending the same way the SPY charts are, but we can't seem to get above it and hold. Breakdown, retest, breakdown. If that continues on that structure, that's going to be obviously quite bearish. Right now, structurally, still a little bit bullish. 21 EMA in here at 20,789. We touched it here, bounced. Are we going to touch it again? Bounce. Either way, we're in the same range we've been in since the beginning of December. Looks like consolidation top. We haven't seen any major structural changes quite yet. This consolidation might take a while to culminate. And for right now, that is what we're seeing. Sideways choppy, not really going much higher, but not really going much lower either. And then looking at that daily chart here, big inside day, big outside reversal day on the Friday. Talked about it. It's not a great indicator. Filled the gap on the NASDAQ, so you have a gap up, gap down. Fill the gap, usually that brings with it some selling. We did touch the trend here, so that is the trend support that we're looking for, 529.97. And then let's look at that hourly chart to see where that selling went to. We did go a little bit lower, pretty much right to the level there, 519.50. That was the level we were watching. We're hoping that this is the structure that's going to hold. That sell at the end of the session was a little dramatic. Acknowledge that there is basically no volume on that. It was at the end of the after hour session. Could just be spread widening out, who knows, but definitely going to be watching the futures market open. If we see the futures tank, might actually do a little bit of a covered position with some short futures potentially. We'll see. Always have to be a little bit careful with those. They can move quite a lot. But if this continues to sell, I do want to cover with those puts that I have. I am a slight bit bullish off of this level. Really want that to hold. If it doesn't, 1492 is the next level, and then that's going to be a major structural change here. So you got a big push here. Breakout, couldn't hold it, round trip the move into this consolidation. And then if it breaks below, pretty big bearish indicator for me. And based on this structure, you have a high, lower high here. Then you would be expecting a low, lower low potentially. Let's go ahead and extend out some of these trend lines. That first trend line would give you some support all the way down in the 506 area, 503, somewhere in here. My level 503.50, so somewhere in this range here, which if we did get that move, that is a pretty substantial, around 2.5% lower. Moving over to the NASDAQ here, same thesis. This is the monthly chart. Hitting that upper trend line continues to be your overhead resistance there. We're not as extended as the SPY charts on the NASDAQ, but it continues to be a zone of resistance. Upper band is 536.07. We just missed it. The high of the week was 533.82. I thought we were going to hit that upper band, and we just did not. So overall, positive month. Continues to kind of uptrend through here. Momentum still bullish, RSI still bullish as everything else here. Momentum still pulling back, ATR trailing stop continues to be bullish. And then looking at that weekly chart, pretty much the same as the SPY charts where you're seeing hit the upper band, pulled back, hit the second band, pulled back, missed that second band, pulled back again. So this is continuing to slow on its upward trajectory, in my opinion. We saw volume coming through on the end of the session there, and you can see that here on the daily. Bearish momentum on the daily. Got the gap fill. Momentum says a little bit bearish there. But again, looking at that hourly chart, 519.45, we're at the lowest band already. How much further can it go in the short term? That's why I'm looking for a short-term bounce, very, very short-term, a day or two, and then I would expect continuation to the lower lows. You can see ATR bands starting to roll over, but they haven't gone yet. Usually when that happens, you get an initial touch here, a little bit of consolidation, and then you get the bigger sell. Obviously, I don't expect it to be as dramatic as this was off of the DeepSeek announcement. Is it going to do that again? Probably not, but can it go lower over the medium term? I think that's probably likely. Moving over to the Russell here on the weekly, you can see down about 1%, 0.97. Momentum still fading. RSI missing the SMA there. Not a great indicator. So you got the breakdown, failed the retest, continuation lower. Again, can we get a short-term bounce? Potentially. This seems like consolidation at this point. Fake out, breakout here, back into this consolidation range now. We're still sitting right on the top of it, so you could argue maybe we're still holding in here, 21 EMA there, 226.10. Overall, not a ton of movement on the week, but that RSI is definitely concerning. And then throwing up the daily chart there with the levels, you got 226.48, 226.02 was the level. We've been in this consolidation range for a couple of days in here. 55 EMAs resistance, 21 EMAs support. Consolidation makes sense, at least for now. And then lastly, we'll talk about that hourly chart, the big sell here. Closed at the low of that kind of after-hour sell. Is it going to hold? Maybe. It's not impossible that you kind of just get a flush out here, but usually you kind of see a little bit of a bounce off. Right now, 225 is the level. I did have a call in here around 224 for about 60 cents, so 223.40 or so, 223.50 is the break-even point, which is the consolidation low of here. Can always roll that out if I need to. 221 would be the level there. 221.50. It's already really extended. It's already oversold on the hourly at 229.86. I'm expecting a little bit of a bounce, but we are back below all the EMAs and SMAs, and this is consolidation range, so we're right at the lows of that. Needs to bounce here if it's going to do it. Moving over to the Russell here on the monthly chart, you can see still slightly positive month. We're still holding that 8 EMA, 220.89 is the level. So far, we've held that on a closing basis. It seems like we're going to test it again here soon. Is February going to be a negative month like we talked about? Potentially. If it does, the next level there is 208.41 on the monthly chart. Still bullish conditions. Trailing stop is much, much lower. We'll see. And then looking at that weekly chart, still bullish conditions here. Got up to the second band, got up to the third band here, a little bit lower band there. Didn't even make it to that first band here. Would like to see it hold this zone. We're still sitting at the 8 EMA, 226.15 consolidation range in here, 224.11. As long as we kind of hold this zone in here, we're still in good shape. Trailing stop is all the way down there at 206.40. We'll see. Right now, looks a little bit sideways consolidative. Want to see this structure high hold, but if it breaks down, your next support is going to be that 220.23 level on the weekly chart. And then daily chart, still bearish conditions here, still cannot get above this consolidation range. So 229, 230, somewhere in there is your consolidation high. Probably going to pull back a little bit more. Once it breaks down, 221.39 is the level. Again, short term, maybe a little bit of a bounce or hold this consolidation, but eventually I do think it'll go lower. Moving over to the Dow here briefly, you can see we're right at the level 445.16. We're just above it there, 445.39. Let's look at the hourly just for a moment to see if this sold off a little bit. Yeah, so it did, right? So we're at 444.70, just barely below the level. At the end of the after hours session, we'll see if that holds up. And then looking at it on the daily, big outside reversal day, fully engulfed. Doesn't look super great. Momentum bearish RSI. Is it going to hold the SMA? We'll see. Right now, looking for a little bit of a bounce off that level. After hours says maybe not so much. Moving over to the equal weighted S&Ps here just for a moment, you can see this was negative on the week, same thesis. You have a level here, 182.22. Touched that level on the previous week, touched it again this week, rejected, finished bearish 0.5%. Consolidation at best, lower high at worst. If you get the lower high, I would look for this 55 EMA down here around 170.78. Moving over to the SPY Russell and the NASDAQ SPY, you can see SPY Russell, slightly negative, momentum fading, still looks like this is rolling over just a little bit. And then NASDAQ SPY, you can see a little bit negative there as well. So the Russell is actually the best of the group Interesting to see that. NASDAQ underperforming. We'll see if that continues. It seems like the NASDAQ's going to underperform. It actually held up a little better on the Friday, which was interesting. The sell-off not as affected by the tariffs. That does make sense a little bit on a fundamental basis, but momentum here, RSI says SPY should be in a little bit better shape. I wanted to drift over towards the SPY, but then we had that big relative outperformance on the Friday. We'll see if that continues. I'll be watching this a little bit closer here this week, see which one makes sense to be involved with. If you're going to be long, obviously you want to be long the stronger of the two. And if you're going to be short, you generally want to be short the weaker of the two. Moving over to the SPY divided by the M2 money supply, declining just like everything else, about 1%. You had the trend in here, missed the trend just slightly. Maybe it should be just a smidgen lower. If you put it right at the high of this candle, that does give you the touch and then the rejection. Still looks like consolidation. We dip below 27.25 just for a moment. RSI breaking down, SMA kind of fading. Still looks like sideways consolidation. This could take a while. If you wait for this 55 EMA to kind of drift higher, that could take you out into March, April potentially, where you just kind of consolidate, wait for this 55 to move into the range. You get a pullback, touch, bounce, touch it again, bounce. And then once you kind of consolidate, then you see those bigger breakdowns. And you can kind of see what I'm talking about here, where you see this kind of pull up, you get the touch, bounce. Moving over to Apple and Microsoft. Apple still did really, really well on the week. They had good earnings. They did give a lot of that back. But either way, it was a good week, especially relative to these 4 down weeks. Big gaps, big falls. Finished 5.9% to the upside. Momentum stepping higher. Again, seems like this is being propped up. Potentially stock buybacks. Potentially we're just waiting for this 55 EMA to catch up. You got the level there, 224. Once we got back above it, it was pretty much straight up all week. Current level, 237.23 is your resistance. We're at 236. And then support would be 230.28. So looking for a little bit of a pullback there. And then looking at Microsoft here, terrible earnings, big sell, 6.3%, right to the level 413.36. We're going to see if this holds. My guess is that it won't. This is a good example of that 55 EMA catch up that I was talking about. Super extended, super extended. We get a touch here, caught a bounce, got a second touch, got a bounce. But now we're just about consolidated with the 921 VWAP all getting very close here between 420 and 430 pretty much. Now we're below all of those. Big volume. To me, this says a little bit bearish. And if it goes, we're still looking for a move to this next zone here, which is about 5% lower. So Microsoft, I don't like to bet against this company, but it does seem a little bit bearish for now. Moving over to Tesla and NVIDIA. NVIDIA had a terrible week, 15.8% to the downside. Went right to the trend structure. So at least the structure still makes sense. Momentum bearish, RSI very bearish, 55 EMA right there at 112.50. Next level, 106.64. We'll see. Right at the trend, we watched the structure here, we broke out above it, and now we're back into it. Is it going to hold? We get a little bit of a rally maybe. It's not impossible. Let's go ahead and extend this out. If we do rally up the next week, somewhere in here, maybe 131, 130, somewhere in there, and then you got Tesla down about 0.5%. They had their earnings, still consolidating. Still looks like a topping pattern to me, momentum fading, RSI fading, but structurally, it just has not broken down, and we are still holding this 384.29 level. Multiple touches here, going back to the end of December, pretty much every week, except for this one here at the mid-January. 4 touches. So far, so good. Moving over to Amazon and Google. We still are waiting on these earnings, but they had really good weeks, 1.2 and 1.8%. All-time highs. Everything looks very clean. Got back above 233 here for Amazon. Dipped down to the trend, caught a bounce, momentum bullish, RSI bullish. Everything looks good. This is going to depend on their earnings, but seems like markets think their earnings are going to be very good. It'll be interesting to see if Alphabet says anything about their Willow chip or Quantum over the next week. If it continues to go, the trend is here around 212, 212.50, somewhere in here. Momentum bullish, RSIs on both of these is a little bit extended. Moving over to staples and discretionaries, these managed to stay positive. Staples continues to be the outperformer, 1.39% to the upside through some wicks. I think it's got a little bit more in it. Momentum bullish, volume bullish. It sold on Friday like everything else, but momentum says this should go. Want to see it get above the SMA here on the RSI. And then looking at discretionaries, this is going to be pending Amazon earnings this week. You got the trend here, almost touched it, sold off. Momentum fading. This could be where you get a little bit of a reversal up potentially, but we're at the RSI. We're so extended. The SMA is overbought. You don't even see that very often with a 70.67 there. We'll see. It looks very extended. Overall, I would say Staples is probably the better bet at this point, which means markets are a little bit risk off in my opinion. Moving over to the transports and real estate. Haven't talked about these in a while, but transports having a big outside reversal day as well. On that Friday, not great. Momentum bearish, RSI bearish, down 2.68%, came up, touched the highly traded zone, pushed all the way back down to the 21 EMA. Not good at all. Lower high setup potentially. If you get the lower low off of that, that could take us all the way down into the 62, 63 area. This is not a good setup. Definitely something to be watching. I said transports were going to be interesting, and I said they were potentially going to guide markets. Now these are big bearish. We're going to see if this starts to guide markets or not. And then real estate, I've been saying buy REITs, buy yields. This is a good place to be. You had a pretty solid bottom in here around 39, 39.30, somewhere in there. This is the Spider Real Estate Fund. There's plenty of others that operate very similar fashion, but somewhere in here, 39.30 to 41. Pretty good opportunity. A little bit higher than that, maybe a little expensive. You can see we've been creating higher highs and higher lows here for a bit now. The low was back here October 23, still holding higher highs and higher lows. You can see consolidation breakdown, but either way, you're not really buying this for the big move. You're buying this for the yields and the stability, which I do think is in play at this point. Moving over to breadth here at the 20 and 50 day, you can see a little bit bearish here right at the consolidation high. Is the 68.14 going to break or not? Potentially. Momentum hasn't gone yet. The daily chart momentum definitely is. And then you can see 50 day, it's kind of the inverse here. We're not done with this rally up yet, but it was a little bit bearish. We got above 52.80 and then broke back below at 52.69. Is this the top? Is this the lower high? That's going to be interesting. We got the gap up. We held the level. So far, this says a little bit of consolidation. Wait for this to kind of fade. But if we get the resurgence to the downside and you get the 20-day starting to go with it, that is going to be bearish. We'll see. Overall, we're at a turning point, waiting to see if this is the actual turn or if we're going to get a little bit more consolidation. Remember that first week of the month is a little bit bullish, so maybe we get one consolidation week and then we see that bigger sell-off. Moving over to the 200-day breadth, you can see this finished bearish as well. We went higher, got into the 62 to 64 range, and then we pulled back, came back to that 58.90 level. Momentum, again, still rolling to the bull side, but RSI, we broke up, starting to pull back a little bit. This is still trending lower. Are we going to get a lower high setup? Are we going to get a higher low setup continuation potentially? Maybe. We didn't get super low. You can see this can go way lower. We got as low as 24 back here in October of 23. But either way, you got a breakdown here. Looks like a bit of a retest. If you get another breakdown, that could be a little bit worse potentially. I'm still looking for just a little bit more upside, but I do still think the risk is to the downside. We're testing the lows of this range, and if it sells off from that level, that is going to be very concerning in my opinion. Moving over to the dollar is positive about 1%, got a boost on the tariff news. Tried to pull back a little bit, ended up bouncing on the week. We're back above 108. As long as 108 holds, you're in good shape. Momentum's fading a little bit. RSI is kind of mixed. Same as everything else. Looking for a short-term pullback, but probably going to end up going higher. We're at the high of the range. We tested it here, tested the zone here. So far, continues to hold support. Moving over to JNK and TLT. JNK was down 5 cents on the week, still in this kind of same consolidation range. And then TLT positive about 0.5%, a little bit more, 0.62%. Continues to look good here. Want to hold this level in here. Still think bonds are in a good spot. Still think this is going to hold in here. Even if we pull back to 85, 85.90, 86 in this range, I think that's an opportunity. You can see RSI right at it. We're starting to roll to the upside. Might see one more pullback, higher low setup continuation potentially, but this looks like a bottoming pattern, and I do think it's going to go higher over the medium term. Moving over to the VIX, you can see we came down, touched the trend, held the trend on a closing basis. We touched it on that Friday after gapping up and rallying, holding the level here. So based on this, expecting to go a little bit higher. We talked about it in the Friday video, maybe in here, 1850, 20 level potentially, and then you have the highs up here, 2050. Right now, we're here at 1640. We'll see. Momentum stepping to bullish, RSI stepping to bullish, VIX showing a little bit more volatility to come over the next couple days. Moving over to my accounts, I finished down about $180 on the week, which is not bad considering that the rest of markets were down quite a bit more. I was able to skip that move on the Monday because I was out and I made a good decision there, and then I kind of got swallowed up a little bit on the Friday session, which was a bit of a bummer. I was super positive going into the Friday, and then I got swept out on that intraday reversal. I didn't take off my positions and I just did not trade super well, but overall, basically a little bit lucky this week, down only $180 on a week where the rest of markets were down pretty substantially. So good move there. And then looking at my accounts, you can see I sold a 224 for the Monday at 69 cents, almost 70 cents there, sitting at a 223.30 buy price, 223.31, somewhere in there. And then looking at the Qs, 218, 219, the buy price is like 217.30, somewhere in there, 217.50. You can see $1.66 credit and almost $2 credit there. So actually a little bit lower than that, I think 216.30 maybe. And then I sold some calls here for the end of the week at 532 for $2 credit. So as markets sold off, those should be in a little bit of a profit, giving myself some protection. We'll see. Right now they're in a little bit of a profit. That's probably not true with the after hours sell here to that 519 area. Might roll these out, might take them off. We'll see. Either way, the calls should be a little bit of a profitable trade for the week. Right now on the short term, like I said, looking for a bounce, looking for some rallies, need to see some of those levels hold in there, but if we start to flush out, absolutely play to the downside. It's possible that the tariff trade is not done and that we have a little bit more downside. Even though we are extended, some of those fundamental moves like tariffs being introduced can absolutely flush out markets and push way past overextended conditions. Let me know down in the comment section what you think of investing over the next 10 years. What do you think of markets right here? Are tariffs going to sink us, or are we going to see a little bit of an early month bounce? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.